He had two fathers. One told him to study hard, get a good job, and save money. The other told him that was exactly how you stay broke. Both believed they were right. Both lived completely different lives because of it. And the gap between those two lives, that's what this book is really about. But here's what's interesting, the one with the degrees, the stable job. The government pension, he struggled with money his entire life. And the one who never finished 8th grade ended up one of the wealthiest men in Hawaii. Same city. Same opportunities. Completely different outcomes. And when you dig into why, it's not what most people expect. And once you see it, the way you think about money never quite goes back to normal. And in this video, that's exactly what we're going to unpack. Starting with why a steady paycheck might actually be working against you. Not in the way most people think. Then why the school system, as useful as it is, left out the one subject that determines how your financial life turns out. And there's a point in the middle where things get a little uncomfortable. Because it challenges something most of us were told was the responsible thing to do. But the idea that ties all of it together, that one's probably going to shift how you see things for a while. And that's exactly what this channel is about. Taking the ideas that actually change how you think, and breaking them down in a way that sticks. If that sounds like something you want more of, subscribing takes 1 second. Now let's get into it. Most of us grew up with the same plan. Study hard, get good grades, land a stable job, collect a paycheck. And for a long time, that plan felt safe. It felt responsible. But Robert Kiyosaki watched two very different men follow two very different plans. And what he noticed was uncomfortable. The man with the steady paycheck, the benefits, the pension. He was always one bad month away from panic. And the man without any of that security? He was building something the paycheck could never buy. Here's what most people misunderstand about money. They think the goal is to earn more of it. So they work harder, ask for raises, chase promotions. And their lifestyle quietly expands to match every increase. More income, more expenses, same stress. It's a cycle that feels like progress but rarely is. Kiyosaki calls this the rat race. And the unsettling part is, most people don't realize they're in it. Until they've been running for decades. The poor dad in this story believed in that cycle completely. He believed a good job was the answer. He believed the government would take care of him. He believed playing it safe was the smart move. And he spent his entire life financially stressed despite doing everything right. At least, everything he was told was right. The rich dad saw it differently. He didn't see a job as a destination. He saw it as a trap, a comfortable one, but a trap. Because when you work for money, you're always dependent on someone else's decision. Your income stops the moment they say so. And that dependence, no matter how well it pays, keeps you in a position where money controls you. Not the other way around. What the rich dad taught instead was this. The goal isn't to earn money. The goal is to make money work for you. And that shift in thinking sounds simple. But it changes every financial decision you make after that. Instead of asking, how do I earn more? You start asking, how do I build something that earns without me? That question leads somewhere completely different. Think about it this way. Two people earn the same salary. One spends it, saves a little, and waits for next month. The other uses a portion to build something. An investment, a small asset, anything that generates a return. 10 years later, their lives look nothing alike. Not because one earned more, but because one put money to work while the other just worked for money. And here's where it gets interesting. Fear is what keeps most people stuck in that cycle. Fear of not having enough keeps them chasing paychecks. And once they have the paycheck, desire kicks in. They spend it on things that feel like rewards. So fear and desire take turns driving every financial decision. And neither one ever leads to freedom. The rich dad's lesson wasn't about getting rich quickly. It was about recognizing that emotion. Fear, comfort, desire is usually what's making your financial decisions. Not logic. Not strategy. Emotion. And until you see that clearly, the cycle just keeps going. But recognizing the cycle is only half of it. Because even if you see the trap, most people don't know what to do instead. And that gap exists for one very specific reason. Something that was never covered in school. And probably never will be. Think about everything school taught you. History, algebra, literature, science. Subjects that took years to master. And yet, not a single class on how money actually works. Not one lesson on reading a financial statement. Nothing on taxes, investing, or understanding debt. For most people, the most important subject in their adult life was never once mentioned in a classroom. And that's not an accident, it's just how the system was built. School was designed to produce good employees. People who could follow instructions, show up on time, and contribute to someone else's business. That's not a conspiracy, it's just the origin. But the problem is, most of us left school thinking we were prepared for the real world. And in many ways we were. Just not financially. Kiyosaki makes a distinction that most people never hear growing up. He separates two things that almost everyone confuses. Income and wealth. Income is what you earn. Wealth is what you keep and grow. And the education system, intentionally or not, only ever taught us how to earn. Never how to build. Here's where it gets uncomfortable. Most people measure financial success by their salary. The higher the number, the better they're doing, or so it feels. But Kiyosaki points to something different. He says financial literacy starts with understanding three basic statements. Your income statement, your balance sheet, and your cash flow. And the moment you actually look at those three things clearly, the salary number stops being the most important figure. The pattern he noticed among wealthy people wasn't a higher income. It was a different relationship with money entirely. They understood where every dollar was going. They could read a financial statement the way most people read a menu. Quickly, clearly, knowing exactly what they were choosing. And that skill alone separated them from people earning the same amount. Or even more. Most people work hard their entire lives. And never stop to ask where the money actually went. It came in, it went out, and the cycle repeated. Not because they were careless. But because nobody ever taught them to look. Financial literacy isn't about being good at math. It's about understanding the story your money is telling you. And most people never learn to read that story. There's a simple idea Kiyosaki keeps coming back to. The rich buy assets. The poor and middle class buy liabilities. Often while thinking they're buying assets. A house, a car, the latest phone. Things that feel like smart purchase. There's a question most people never think to ask. What's the difference between your job and your business? And most people, if they're being honest, would say they're the same thing. You work, you get paid, that's your financial life. But Kiyosaki draws a line between the two. That most people spend their entire careers never seeing. Your job is what pays your bills today. Your business is what builds your freedom tomorrow. And the problem is, almost everyone puts everything into the job. And nothing into the business. Not because they're lazy. But because nobody ever told them there was a difference. The poor dad in this story was a perfect example. Highly educated, respected profession, steady income. His entire identity was wrapped up in his career. And because of that, when his career hit a wall, his financial life hit a wall with it. Everything he had was tied to one source. One employer. One paycheck. One decision he didn't get to make. The rich dad thought about it completely differently. He kept his day-to-day expenses covered. But his real focus was always on building a column of assets. That had nothing to do with his job. Real estate. Businesses. Investments. Things that generated income whether he showed up or not. His job was temporary. His business was permanent. And here's what makes this idea so easy to miss. Most people think starting a business means quitting your job. Raising capital, taking a huge risk. But that's not what Kiyosaki means. Minding your own business doesn't require you to quit anything. It means starting to build something on the side. Quietly, consistently. While your job covers your living expenses. The job funds the life. The business builds the future. Think about two people in the same company, same salary. One goes home, watches TV, spends the weekend relaxing. The other spends a few hours a week learning about real estate, picking up a small investment. Building something outside the walls of their employer. 5 years later, one of them has options. The other is still waiting for the next raise. The difference wasn't talent. It wasn't even time. It was the question they were asking. One was asking how to do their job better. The other was asking how to build something that didn't need them every day. Kiyosaki is specific about what counts as a business in this context. It's not a side hustle that trades your time for money. That's just a second job. A real business, in his definition, is something that generates income without requiring your constant presence. Stocks. Rental properties. A business that runs with a system. Anything that puts money in your pocket. Without demanding your hours in return. And the reason most people never build that isn't lack of money or lack of time. It's that they never separated the two ideas in their head. Job and business felt like the same thing. So they optimized for the job. Better title, higher salary, more stability. While the other column stayed empty. The quietly uncomfortable truth is this. Your employer is minding their business every single day. They're building assets, growing equity, expanding. And you're helping them do it. Which isn't a bad thing, until it's the only thing. But even when people start to see this, even when they understand the difference between a job and a business, there's still a layer most people don't know exists. A layer that the wealthy have been using for a long time. One that's built right into the system. And it's completely legal. Here's something most people don't know. Income tax wasn't always a permanent fixture. In the United States, it started as a temporary measure. Aimed specifically at the wealthy. The idea was simple, make the rich pay their fair share. And most people supported it. But something interesting happened over time. The tax burden quietly shifted. And the people it was originally designed to target figured out how to work around it legally. While everyone else just kept paying. That's not speculation. That's history. And understanding it changes how you see the entire conversation around money and fairness. The wealthy didn't avoid taxes by breaking rules. They avoided them by understanding something most people never learn. The difference between how an individual gets taxed and how a corporation gets taxed. And that difference is significant. Here's how it works for most people. You earn money. The government takes a portion immediately. Whatever's left, that's what you live on, spend, invest. Earn, tax, spend. That's the sequence almost everyone follows. Without even questioning it. Now here's how it works inside a corporation. The corporation earns money. It spends on expenses, operations, equipment, development. Whatever's left after expenses gets taxed. Earn, spend, tax. The sequence is different. And that difference, compounded over years, creates a completely different financial outcome. Kiyosaki isn't saying this to make anyone angry. He's saying it because most people don't know it exists. And not knowing it means you're always playing by one set of rules, while others play by a completely different set. Legally, openly, and with full government approval. The wealthy figured out a long time ago that corporations aren't just for big businesses. They're a legal structure that changes how money flows. What counts as an expense? What gets taxed? What gets protected? And the people who understand that use it to keep more of what they earn and build more with what they keep. Now, this isn't about loopholes or shady accounting. The frustrating part, actually, is how straightforward it is. A business owner can write off a car used for work, travel related to business, a home office, meals during client meetings. These are legal deductions that reduce taxable income. Expenses that an employee pays out of pocket with after-tax dollars. Same purchase. Completely different financial outcome, depending entirely on which side of the system you're on. And most people never end up on the other side. Not because it's inaccessible, but because they never knew there were two sides to begin with. School didn't cover it. Their parents didn't know it. And so the cycle continued, quietly, invisibly. One generation passing the same financial blind spot to the next. Kiyosaki's point isn't that the system is unfair. His point is that the system exists. And understanding it is available to anyone willing to learn. The wealthy didn't create different rules. They just took the time to read the ones already written. And that's where the real gap lives. Not in income. Not in opportunity. In financial knowledge, and the willingness to act on it. But knowing the rules is only part of it. Because even people who understand taxes, corporations, and cash flow still get stuck at a very specific point. The moment where an opportunity shows up. And instead of seeing possibility, they see every reason why it won't work. That pattern has a name. And it's probably the most expensive habit most people never notice in themselves. There's a pattern that separates people who build wealth from people who just read about it. And it's not intelligence. It's not connections. It's not even capital. It's the way they respond when an opportunity shows up. Most people see an opportunity and immediately start calculating risk. What if it doesn't work? What if I lose money? What if I'm not ready? And by the time they've finished calculating, the opportunity is gone. Someone else moved on it. And they're left with the same life they had before. Slightly more convinced that opportunities just weren't meant for them. The rich dad called this waiting for the perfect moment. And his view on it was blunt. The perfect moment never comes. What comes instead are imperfect opportunities that require a decision before you feel completely ready. And the people who build wealth are almost always the ones who got comfortable making that decision. Kiyosaki tells a story about a piece of land in Hawaii that most people passed on because the price felt too high. He didn't have the money either. But instead of walking away, he asked a different question. Not, can I afford this? But, how can I make this work? That shift in the question changed everything that followed. And that's the core of what this chapter is really about. The rich don't wait for money to appear before they move. They create the conditions that make the money follow the decision. They find undervalued assets. They structure deals creatively. They use other people's money, other people's time, other people's expertise. Not because they're clever in some special way, but because they train themselves to see options where most people only see obstacles. There's a financial concept underneath all of this that most people never develop: financial intelligence. Not book smarts. Not a finance degree. The ability to look at a situation and find a solution. That isn't immediately obvious. To see value where others see risk. To move when others freeze. And here's what makes it interesting. Financial intelligence isn't something you're born with. It's built through exposure, through reading, through trying. Through making small moves and learning from what happens. Every time you analyze an opportunity, even one you don't take, you're building that muscle. Every time you ask, how could this work, instead of, why it won't, you're training your brain to operate differently. Most people never build that muscle. Because the environment they grew up in never required it. Safe job, steady paycheck, spend what comes in. The system worked well enough that the muscle never had to develop. And then one day an opportunity shows up. And the muscle isn't there. Kiyosaki's point is uncomfortable but honest. Opportunities are always available. They don't disappear, they just get picked up by someone else. Someone who trained themselves to recognize them. Someone who asked different questions. Someone who moved before they felt completely ready. The gap between people who build wealth and people who watch others build it often comes down to one thing. Not money, not luck, not talent. But the decision to develop financial intelligence before they needed it. And developing that intelligence runs into a very specific wall. For almost everyone who tries. Not lack of information. Not lack of opportunity. But something internal. A set of habits and fears so deeply ingrained that most people don't even recognize them as the thing holding them back. That's where we're going next. There's a question most people never think to ask about their job. Not, how much does it pay? But, what is it teaching me? And for most people, those two questions have very different answers. The salary gets evaluated carefully. The learning rarely does. And that imbalance quietly shapes the entire trajectory of a career. Usually without anyone noticing until it's too late to change course. Kiyosaki makes an observation about this that's easy to dismiss. And hard to forget once you actually sit with it. Most people are one skill away from a completely different financial life. Not one degree. Not one promotion. One skill. The problem is, they've spent their entire career getting better at one thing, while the skills that would actually change their situation went completely undeveloped. The poor dad was brilliant at what he did. Educated, experienced, respected in his field. But his skill set was narrow. He knew how to be a great employee. He didn't know how to sell, how to manage money. How to communicate an idea to a room. How to read a financial statement. And those gaps, invisible on a resume, were the exact gaps that kept him financially stuck. The rich dad thought about career completely differently. He didn't stay in a job because it paid well. He stayed, or left, based on what it was teaching him. And when a job stopped teaching him something useful, it stopped being worth his time regardless of the salary. He actively moved through different experiences. Not to climb a ladder, but to collect skills. Sales. Marketing. Management. Investing. Each one adding a layer that the previous one didn't have. And over time, that combination of skills became worth far more than any single specialization ever could. Here's where most people get stuck. They find something they're good at. Something that pays reasonably well. And they stay. Because leaving feels risky. Because starting over feels like going backward. But Kiyosaki's point is that staying in a comfortable role that stopped teaching you anything new is its own kind of risk. A slower one. A quieter one. But just as costly in the long run. The skill he talks about most, the one he calls essential, is sales. Not because everyone needs to become a salesperson, but because the ability to communicate value, to move people from hesitation to decision, To present an idea clearly and confidently. That skill amplifies everything else you know. A brilliant idea that can't be communicated is worth the same as no idea at all. And most people, regardless of their expertise, were never taught how to sell. There's a pattern among people who build real financial independence. They're almost never specialists who got really good at one thing. They're generalists who collected enough skills to see opportunities from multiple angles and move on them when others couldn't. They understand money. They understand people. They understand systems. Not deeply in every area, but enough in each to connect the dots that specialists operating in silos never see. And the interesting thing is, you don't need to quit your job to build those skills. You don't need to go back to school. You need to be intentional about what your current situation is teaching you, and honest about whether it's still teaching you anything at all. Because the skills you build in the next few years will determine what options you have in the decade after that. And the people who understood that early didn't just end up with better jobs. They ended up with choices. But even with the right skills, the right knowledge, the right mindset, there's still something that stops most people cold. Something that has nothing to do with what they know, and everything to do with what they're afraid of. And it shows up in ways most people would never recognize as fear. Most people who understand everything we've talked about so far still don't change anything. They read the book. They nod along. They feel something shift for a moment. And then life continues exactly as it was before. And the reason isn't lack of information. It's something older than that. Something that was running long before they picked up the book. Kiyosaki identifies 5 specific obstacles that stop financially educated people from building wealth. Not ignorant people. Not lazy people. People who actually understand the concepts and still can't seem to move. The first is fear. And not just the fear of losing money, though that's part of it. It's the fear of being wrong, of making a decision that doesn't work out, and having to live with the consequences. Most people would rather do nothing than do something that might fail. And so they wait for more information, for better timing, for more certainty, none of which ever fully arrives. Kiyosaki points to a pattern among wealthy investors. They lose money too. The difference is they don't let a loss become a reason to stop. They treat it as tuition. Information that cost something, and was therefore worth remembering. The people who never lose are usually the people who never moved. And not moving has its own cost. It's just a cost that never shows up on a statement. The second obstacle is cynicism. That quiet voice that shows up whenever an opportunity appears. The one that immediately starts listing reasons why it won't work. The economy is bad. The timing is wrong. I've seen people try this before. Kiyosaki calls these people Chicken Little. Always convinced the sky is about to fall. And the frustrating thing about cynicism is that it sounds like wisdom. It sounds like caution. Like experience. But most of the time it's just fear wearing a smarter outfit. The third is laziness. But not the kind most people picture. It's not lying on a couch doing nothing. It's staying busy. Filling every hour with work, obligations, errands. So there's never any time left to think about the bigger picture. Kiyosaki calls this active laziness. The art of staying so occupied with what's urgent that what's important never gets any attention. Most people don't avoid building wealth because they're idle. They avoid it because they've engineered a life where there's simply no space left to try. The fourth obstacle is bad habits. Specifically, paying everyone else before paying yourself. Most people receive their income, cover their bills, their rent, their subscriptions, and whatever's left, if anything, get saved. The rich dad flipped that sequence entirely. Pay yourself first. Put money into assets before the bills get paid. Let the pressure of the remaining obligations force you to find creative solutions, rather than defaulting to comfort. It sounds counterintuitive. It is counterintuitive. But it creates a discipline that waiting until the end of the month never does. The fifth obstacle is arrogance. The assumption that what you don't know doesn't matter. Kiyosaki noticed that the people who struggled most financially were often the ones most resistant to learning something new. They confused confidence in one area with competence in every area. And that gap, between what they thought they knew and what they actually knew, was exactly where money kept disappearing. What ties all five of these together is that none of them are about money. They're about the internal patterns that determine what a person does when an opportunity is right in front of them. Fear, cynicism, busyness, bad habits, arrogance. All of them invisible on the surface. All of them expensive underneath. And here's the thing. Most people reading this will recognize at least one of those in themselves. Maybe more than one. That recognition alone is worth something. Because you can't change a pattern you haven't named. Now, we've covered a lot of ground. The mindset shift. The financial literacy gap. The difference between a job and a business. The way the tax system actually works. How wealth gets created. What skills actually matter. And the internal obstacles that stop people who know better from doing better. But there's one idea we haven't fully unpacked yet. The one that sits underneath all of it. The simplest distinction in this entire book. And probably the most powerful. If you've made it this far, you're already ahead of most people. If you've made it this far, you're already ahead of most people. And what we're about to cover isn't complicated. In fact, it might be the simplest idea in this entire book. But simple doesn't mean easy to apply. And most people, even after hearing it, still get it wrong in practice. The distinction is this. An asset puts money in your pocket. A liability takes money out. That's it. 2 sentences. And yet this single idea, clearly understood and consistently applied, is the foundation of almost every wealthy person's financial life. The reason most people miss it isn't because the definition is hard to understand. It's because the things we've been told are assets often aren't. And the things we buy thinking they're investments are quietly draining money every single month. The house is the clearest example. For decades, homeownership has been sold as the ultimate financial move. The responsible choice. The smart investment. Build equity. Stop throwing money away on rent. And for many people, it genuinely makes sense. But Kiyosaki pushes back on the automatic assumption that a house is always an asset. If it's taking money out of your pocket every month. Mortgage, maintenance, taxes, insurance. And not generating any income. Then by definition, it's a liability. It might appreciate over time. It might eventually become an asset. But in the meantime, it's costing you. And most people never stop to look at it that way. The same logic applies to cars, gadgets, furniture. Anything that costs money to own and generates nothing in return. We call these things purchases. Sometimes investments. But under Kiyosaki's definition, they're liabilities. They feel good to own. They signal success. But they don't build anything. Now, this isn't an argument against owning a home. Or buying things you need. It's an argument for clarity. For knowing exactly what each thing in your financial life is actually doing. Is it building your wealth or shrinking it? Is it working for you or costing you? Most people have never asked those questions clearly. And so money keeps moving through their life, without anyone really directing where it goes. The wealthy, almost universally, focus on one thing first: building the asset column. Stocks that pay dividends. Real estate that generates rental income. A business that runs without requiring their constant presence. Intellectual property, a book, a course, a system that earns long after the work is done. These are things that put money in your pocket, whether you show up or not. And the goal, the actual goal, is to eventually build an asset column large enough that the income it generates covers your expenses entirely. That's what financial freedom actually looks like. Not a number in a savings account. A column of assets producing more than you spend. And here's what makes this idea so powerful. When you place it next to everything we've already covered. The rat race exists because people work for money instead of building assets. Financial illiteracy keeps people from knowing the difference between what grows their wealth and what drains it. Minding your own business means building that asset column outside of your job. Understanding taxes and corporations means keeping more of what the assets produce. Inventing money means seeing opportunities to acquire assets where others only see risk. Working to learn means collecting skills that help you identify, evaluate, and manage assets better. And overcoming obstacles means removing the internal patterns that stop you from building the column at all. Every idea in this book points back to this one distinction: asset or liability. In your pocket or out of it. And once you start seeing every financial decision through that lens, it becomes very hard to unsee. The question isn't whether you can build an asset column. Almost anyone can start somewhere. The question is whether you're willing to be honest about what's currently in your financial life. What's building something, and what's just costing you. That honesty, more than any strategy or tactic, is usually where it actually starts. So here's what this book really comes down to. Two men. Two completely different ways of seeing the world. And the gap between them wasn't income or education or luck. It was the way they thought about money. And what they did with it when it showed up. The rat race exists because most of us were never taught that working harder inside a system doesn't automatically build freedom outside of it. Financial literacy wasn't in the curriculum because the system wasn't designed to produce investors. It was designed to produce employees. And most people left school with every skill except the ones that actually determine how their financial life turns out. The difference between a job and a business. Between earning and building. Between a liability and an asset. These aren't complicated ideas. They're just ideas most people were never introduced to. At the moment it would have mattered most. And even when people find them. Fear, cynicism, busyness, and habit have a way of making sure nothing changes anyway. But here's the quiet truth underneath all of it. None of this requires a perfect moment. It doesn't require a large income or a financial background. It requires a shift in the question you're asking. Not, how do I earn more? But, what am I building with what I already have? That question, asked honestly, is usually where it starts. If anything in this video landed, the part worth sitting with longest isn't a tactic or a technique. It's the realization that the most confident people in the room aren't the loudest ones. They're the ones who never felt the need to prove anything. And that kind of confidence, the quiet, unshakable kind, starts exactly where this book starts. With learning to pause before you react. This channel is built around ideas like that. The ones that don't just add information, but actually change how you move through the world. If that's something you want more of, subscribing takes 1 second. And it means the next idea finds you. instead of you having to go looking for it. And the next one is already waiting. Because once you understand how to stop reacting, the next question is what to do with that stillness. How to use it. How to build with it. How to turn that quiet control into something that actually moves your life forward. That's a different conversation. And it might be the one that connects everything.